Good afternoon, everyone. I hope you had a good weekend. Welcome to Taking Stock on Vox Markets. This is Graham Neary. We've got a few companies to look at today. We've got the Hipgnosis Songs Fund, Petrofac, Eagle Eye Solutions, Induction Healthcare, Christie Group, Space and People, possibly Vast Resources. We've got a couple of suggestions in the comments. Thank you all for joining me. El Saint, Steve, Paul, and Lemon Physical is here. Yes, we are going ahead today. So please subscribe if you're new. Hit that like button if you want to do us a favor. And I hope you enjoy the show. So let's share screens as per usual. We've got the Vox homepage over here. And let's put that there. So yeah, Mondays are usually not too busy compared to Tuesdays and Wednesdays, but we do have a few things we can look at today. If you were here on Friday, we had a very busy Friday in terms of Vox. For myself, we had the interview with Paul Hill, which went out in the morning. So that's up here if you're looking for it, the exchange with Paul Hill. Okay, so let's get into today's news. There's the most read RNS. We might come back to that a little later. So we've got this Songs Fund. I do like to cover takeovers first, takeover news first. And so for April 29th, we have another announcement in relation to takeover. Going back over my notes here, we had a takeover offer at $1.16. We had a takeover offer at $1.25. And here we have a takeover offer at $1.30, which is equivalent to 104p. So yeah, I did cover this story a couple of weeks ago, but the bid has been moving up. So people did the right thing by holding on, it seems, because the buyers are competing against each other. And this is Blackstone. The previous bids were from another party that was a specialist in music rights. So $1.30 equivalent to 104p. I do think they could move these things up a little faster. You know, they moved up by 4 cents, then they moved up by 5 cents. They could, they could put in their actual bid, I think, maybe a little faster. But anyway, they're getting there. I also did a little bit of digging into the problems at Hipgnosis Songs Fund. It does have some pretty serious problems in relation to its valuation. There's been a revision of its net asset value, and from what I understand, the correct number to use here for net asset value is 107.6p, being what they call this the pro forma net asset value, operative net asset value. It's all very complicated. It seems like the board of directors themselves have been sort of, I don't want to say misled, but they've been incorrect in their assessment of net asset value. The investment advisor themselves has given numbers which have been queried and which have been corrected, and it's all quite messy. So it's easy to understand why this company is leaving us, because if even the board of directors aren't sure what the net asset value is, well, then how on earth can private investors or fund managers figure it out? So I think it makes sense that this one is leaving us, and 104p is probably quite a fair number if the real net asset value is 107.6p, and if the shareholders have voted to basically end the company, then I think 104p is quite a reasonable number to get. So that's the latest there. Looks like Blackstone are in the lead. Can't completely discount the possibility of another bid at 135, for example, but that could be it now. $130 for this one. Okay, so that's the Song Fund. Now let's do Eagle Eye Solutions, covered by my colleague Paul Scott at Stockopedia this morning. This company provides personalized marketing. So I think it's offers and discounts. You can get them in an app, and they're targeted at customers based on their history. So you can see the names mentioned here are all blue chip names: Sainsbury's, Marks and Spencer's, Pizza Express, and so on. So plenty of credibility there for Eagle Eye Solutions. The historic finances here are a bit mixed, mostly loss making in the past, but possibly looking pretty good now in the last year or two. Looks like it may be crossing over into profitability, which is always a huge catalyst for growth companies. Anyway, we've got an RNS today. It was published by Reach. So I just want to make sure everybody's aware that when Reach is published, it means that it's not material, which it can be interpreted in different ways. But the way I interpreted it is that if you have an announcement from Reach, then it basically means that it's not a profit warning, it's not a profit upgrade, it's something that the company more or less expected to do. It was sort of baked into the estimates and the assumptions. So that's the point here about Reach. Anyway, still worth taking a look at what they say. They've got a 1-year contract with Tesco, and it's an AI-powered personalized challenges solution, building on the existing relationship they have with Tesco. It's a digital platform which enables retailers to personalize promotions, providing customized challenges designed to reward incremental behavior. So obviously we have the customary mention of AI and deep machine learning. But anyway, it's a good news announcement, of course, and we'll see what it leads to. Will it lead to an extension and further business? The CEO of Eagle Eye says that this win underlines the power of the Eagle AI solution, capable of creating and delivering millions of hyper-personalized marketing messages. So I certainly have an open mind on this company. It is showing signs of promise and signs of potential profitability, which will obviously bring it into a lot more people's sort of filters and checklists and things as they look for investment opportunities. Just take a quick look at the financials here. You can see revenues growing very impressively. I think that may be with the help of an acquisition, and pre-tax profits here in 2022, a small loss in 2023, and I think profits are baked into 2024. So, I mean, the key point here is that the losses, such as they are, have been very small. So that certainly gives confidence that the company is being run in a responsible sort of way. So good news there from Eagle Eye. We'll see how far they can get with this Tesco contract. Okay, let's do Petrofac. This one is down by 30% today. Quite a lot of bad news, I have to say. Market cap here is only £81 million. If you've been around the UK stock market for a while, you'll know this name. It's a very old name. It's obviously been much higher market caps than this one in the past, but it looks as if shareholders are headed for some kind of difficult outcome here. For what it's worth, Fitch, the ratings agency, downgraded this to CC rating. So CC rating from Fitch means that a default is profitable. And Fitch also said that a restructuring was inevitable. That was in an update which they sent out quite recently on the 16th of April. So anyway, today, well, this is a 12th of April update from Petrofac. Let's see if we can get this more recent update. Okay, I'll have to pull up a different tab for the most recent update. If you just bear with me a moment, I'll be able to get the latest update for you. Okay, so I'll be able to read this on my own screen. Apologies, you won't be able to read it with me, but the point is, anyway, there's a delay to publication of 2023 results. And I thought it was quite disappointing that they didn't give a good reason for this. Usually when there's a delay, there's some kind of excuse that's given. Unfortunately, there's no excuse given here. They just say that they require additional time. And, you know, these are 2023 results, which they are hoping to publish by the end of May. So that's quite disappointing. They also say that their senior secured note holders have made a proposal to provide credit of up to $300 million. And that's a mixture of new loans and credit support, which is basically a guarantee to Petrofac's customers. In the case of Petrofac being unable to fulfill its contracts, the Petrofac's lenders will basically compensate Petrofac's customers. This proposal is not binding yet, but it has been proposed by some of Petrofac's lenders. A few other points here worth mentioning. That Petrofac says it does not expect to make the payment of a bond coupon on the 15th of May. They have assurances from 41% of the holders of these bonds that they will provide forbearance, meaning that they won't take any action. But obviously that still leaves 59% of Petrofac shareholders who have not yet promised that they will take no action. So, I mean, there's a few other bits and pieces in today's update from Petrofac. The bottom line is that this is extremely distressed. It doesn't get much more distressed than this, frankly. Net debt is $583 million as of the 31st of December 2023. And yeah, so it's at this point, it's really just a question of how much dilution equity shareholders are going to suffer. It could be a lot, probably will be significant, and it's a question of negotiation now. And there is that risk that some lenders are not happy with what they get offered and that they simply want to, you know, go through a legal procedure and get as much as possible, which could ultimately mean that existing shareholders are left with basically nothing. So, I mean, look, my opinion on this is obviously that it's a gambling chip. I mean, off the top of my head, I would say $81 million of market cap seems quite generous. Probably could trade cheaper than that, and I don't know why it doesn't, but maybe there's an argument for it trading at this level. Yeah, so existing debt will be converted to equity here, most likely, and remains to be seen how much. So hopefully it does survive and we don't see it come to a sad end. It's been around for a long time, and it would be unfortunate to see it go entirely. Okay, moving on to something perhaps a little bit more positive. we'll do Induction Healthcare. Please do hit me with your comments in the live chat. I appreciate it very much, and it's very nice to see you all here today. I also appreciate comments under the replay, of course, as well. Most people do watch this on replay. Okay, so we've got Induction Healthcare up 4%, and this is a small company, market cap 11.5 million. It provides software for patients and healthcare professionals. It's also got a, one of its products is an appointment booking program. So you would think that this is quite useful stuff and in good demand. And the highlights here from today's full year trading update do show some small growth in revenues. As I said, this is a small company. Revenues grown from 13.6 to 14.1 million pounds. We've got adjusted EBITDA expected in line with market expectations. Now, this is a company I was quite positive on it the first time I looked at it. And when I looked at it, and this is going back a couple of years, it had, I think, about 10 million pounds of cash. So over time, it has been burning cash, as you expect, young companies to do. But it seems like they are really trying very hard to hang on to this bit of cash. You can see that from the 31st of March 2023 until a year later, their net cash pile only fell by 0.6 million pounds. And they did have this positive adjusted EBITDA for the year, which is a big improvement from the prior year. So definitely some good news here and some signs that this small company could be breaking into success and profitability. In terms of operational highlights, they mentioned this cost containment and margin enhancement program. They say they've got self-sustaining growth now, and they've signed new contracts with NHS England trusts. You see mention of Zesty here, and they do mention some competition, but it seems like they're sort of fending off that competition to some extent. So here the chief executive mentions competition here. So this is an important paragraph. He says, our key focus this year was to stabilize the business, complete a cost containment program, and put Induction, i.e. the company, onto a self-sustaining path without the need for immediate funding. And he says, I am very pleased that we have delivered on these objectives. And then skipping ahead a little bit, he says, while we continue to see downward pressure on pricing for Attend Anywhere, the number of trusts moving to our main competitor remains low. So sort of a glass half full statement there. And overall, I think this is interesting as far as small loss-making growing companies goes. This seems like a decent candidate for research, and I'd certainly be open-minded to keep studying this one as a possible investment. Okay, so that's Induction Healthcare, looking pretty nice, still very small, 11 million. Will we hop over to Christie Group? This one's been around for a very, very long time, CTG, and it provides an extensive portfolio of professional services. So if you wanted to buy a dental clinic, a pub, a pharmacy, or a shop, or if you wanted to sell one of those things, Christie & Co. would be able to sort you out. They also provide finance, so commercial. They're a broker for commercial finance, and they've got various other small businesses which do things like stock taking and stock management. So very much B2B kind of stuff. Paul is in the comments and mentions that Harwood owns circa 5% of Induction Healthcare. Always good to know where Harwood are investing. So thank you very much for that, Paul. So anyway, Christie Group has been around forever, and I suppose my concern here is just that it's been around for so long, and the long-term record here is just, I mean, frankly, quite stagnant, I guess is the best way of putting it. Just not really showing much growth. Before I look at today's results, I'll just see if I can get these financials here. You can see the revenue line here from 2022 and backwards, just not really going anywhere. Had a bad year in 2020. We can excuse that. That's fine, but just not really going very far. But they do generally produce a profit. So not saying that it's a bad company, but just not providing much growth to get us really sort of excited. But anyway, look at today's full year results. We've got revenue down 5%. We've got an operating loss, and that's an adjusted operating loss. And then they finished with net funds of only 0.6 million. So even from a value investor's point of view, I'm afraid that this one doesn't really stand out by giving us, big, strong balance sheet, which we would like to see. I see Ross in the comments asking about Orchard funding. I have heard of them. I may have looked at them once or twice. Do they have news out today? Perhaps you can let me know. Orchard funding. And we've also got a request in the comments in relation to APQ. So I will have a quick look at both of them. So thank you for the suggestions. Anyway, we'll just carry on with Christie for a minute. In terms of 2024 outlook, the group is well positioned for an improved performance in 2024, with opportunities for growth across all business sectors in the UK and internationally. Current activity levels are encouraging, with our UK transactional brokerage pipelines strongly ahead of this time last year, and our finance brokerage business experiencing strong demand. So what happened last year, if I remember correctly, at Christie was that they basically said that inflation and interest rates had meant that business buyers and sellers were just struggling to get transactions over the line. I suppose with a lot of these small physical businesses, you might be able to compare them to the housing market. Maybe it's not that different. Pubs, hotels, and shops and pharmacies, maybe they struggled last year in terms of sales transactions in the same way that the housing market did, because it's a similar type of transaction. So, I can certainly accept that was the reason. Indeed, the chief executive here is saying interest rates and inflation. So will 2024 be back to normal? Probably another interest rate sensitive bet. If you were very bullish on UK hospitality, maybe this could be a share that would be interesting. I'll do Control F on hospitality. And just to point out the exposure here, they say in our stock taking division, the departure of Wilco had a major impact on one of their businesses, but we made encouraging progress in the continuing post-COVID recovery of our hospitality stock-taking business. So that's mentioned there. Same points made later on in the statement. So this business is called Venners. So yeah, could be worth a look, especially if you're bullish on these sort of small hospitality businesses. Could be something to look at there. Overall, though, I would love it if Christie was a bit more ambitious, but they just seem to, every year just seems to be around the same. Revenues down 5% here, we haven't got long-term revenue growth at this business, I'm afraid. Okay, before I look at the viewer requests, one other tiny stock here, Space and People. So this is a teeny tiny company, value 1.7 million. I think Paul covered it over at Stockopedia today as well. And I used to study this company as a potential value investment back in the day when I really didn't care how small a company's market cap was. And if it was below 10 million, I would think, well, that's quite interesting. Maybe I've discovered something that nobody's ever looked at before, or very few people have ever heard of. And then through the pain of experience, I learned that sub 10 million pound market cap companies are extremely hard work on a number of levels. Obviously, you have the bad liquidity, but you also have the fact that they're simply too small to be listed long term. So, like, if this company is paying a couple of 100,000 in listing costs every year, then that suggests that it's 1.7 million is just too small to justify that as a market cap. But there's always the chance, and this is why people love to dream. There's always the chance that this will double or treble or quadruple from a tiny base. I suppose we saw that last year with Plexus Holdings POS. So people are going to dream, and I can understand why you might dream about this one. Cash at year end of 1.9 million pounds is higher than the market capitalization. There was good growth in revenue from 4.7 to 5.8. You had an improvement in EBITDA, and we've got an operating profit as well. So what do? They book space for brands and agencies. They say they are the largest booker of brand experience space in Europe. So, that sounds like quite an important company. And, we have these positive results. Space and People has returned to profit after the difficult COVID impact period. Continuation of growth trends, and so on and so on. The business remains strongly cash generative and has limited capital expenditure needs. And we will look to return to paying dividends at a suitably prudent time when distributable reserves permit. So who would have guessed that a company with a market cap of less than £2 million listed on the stock market would be talking about paying dividends? It's all very unusual. That's why this company, it came to my attention before, and I'm sure there must be plenty of other value investors who noticed it, because it is a real business. It seems to be profitable sometimes, not every year, but it does sometimes make a profit, and you've got this promise to pay dividends. In terms of, do we get an outlook statement here? So our ability to grow and develop the business is dependent on us understanding the needs of our property groups and our space buyers. We have ambitious plans over the next 12 months to continue to grow our retail services, increase the information available to brand agencies, and so on. So very positive commentary as well. You scroll down, they have group cash inflow from operations of 0.7 million after 1.1 million the previous year. So obviously your cash flow multiples are probably going to look quite interesting with a market cap of less than 2 million. And there was a point made in the comments under the small cap value report today around debtors. So I just thought I might scroll down and look at the debtors here. Maybe a Control F might be in order here. Let's see, goodwill, dividends, receivables. Yeah, so here's your debtors table. So as of 31st of December 2023, there's £856,000 of debtors, and of that, £571,000 is 61 days plus past due. So yeah, that's that's a good point. I think Boone made that in the comments over at Stockopedia. I mean, look, they did improve it from the prior year. It was even worse last year, 1.6 million past due. So they did get paid by some of those creditors, and it does look slightly better this year. But yeah, look, a teeny tiny company. I think I'm personally past the point where I'll be investing in things worth less than 10 million, but who knows, maybe someday. Good luck to anybody who wants to have a go at this one. I can certainly see the arguments for it. Now, we have another suggestion in the comments to look at ONDO InsurTech, which I haven't covered today. Okay, so before going any further, let's go over to the homepage and just remind ourselves what's here on the most read RNS list for today. So we've got Vast Resources is in number 1. Then we've got Supply Me Capital, which I reviewed a few weeks ago. I probably won't look at this one again today because I covered Supply Me Capital in some detail not that long ago. So Space and People, which we've covered. We've got Upland, Poolbeg Pharma, and there's ONDO InsurTech, which riffs off of suggested in the live chat. So okay, well look, let's go into this one because we've had the suggestion from the viewer. Market cap here 13.6 million, up 4%, and honestly, not a company I'm familiar with. But look, let's give it a chance and let's see what it's saying here. ONDO InsurTech, a leading company in water leak claims prevention technology for home insurers, is pleased to provide the following update with regards to the nationwide partnership. And so this is going to US homeowners insurance customers. And is this a reach or is it okay? So this is a reach RNS. So remember what I said earlier. It's this should not be considered material. This is sort of in line with what the company would have planned to do, before now. But it does sound positive. It's a 6,000 unit order, and perhaps some similarities with Eagle Eye Solutions. In the sense we have a small company partnering with a large company, and hopefully this will work out and will lead to more business in the future. But I'm sorry I haven't studied ONDO InsurTech in detail, but happy to mention it here in passing. Take a quick look at the financials. Presumably this is quite a young company. Yeah, so we haven't really got any historic financials here. So I assume this is quite an early stage business. Looks like maybe even pre-revenue as far as 2022 is concerned. Okay, but thank you very much for the suggestion, and please keep them coming. So the most read RNS today, just as a reminder, is this one from Vast Resources. Market cap only 3 million. Let's see here, profile. So a mining company in Romania and Zimbabwe. And we have an update on funding. So yeah, quite a lot of detail here about funding. So I would say, yeah, I'd have to go away and study this one, come back with an intelligent opinion on it. But that is today's most read RNS. I just wanted to mention that in passing in the mining industry. And then in terms of reader suggestions, we had a suggestion to look at orchard funding, ORCH. Now we've got the market cap working here. Let's see, ORCH. Okay, so this is only £6 million market cap. Shares down a little bit today. I think I did study this one before, and I thought that it was possibly offering some sort of value. But let's see what we've got here. Those half-year results came out on April the 9th. And on April the 9th, I think we may have covered them on Stockopedia. Yeah, Paul covered them on Stockopedia on April the 9th. So they haven't got news out today, Orchard Funding. So let me see who suggested this one. This was Ross in the comments. He said, looks like an interesting situation with a possible near-term realization of value as per their latest update, buyback, tender offer, or delisting. So yeah, I did study this one before, and I thought that there were signs of value, but I didn't have a definitive view on it, and yeah, they haven't got news out today, but this is their update from April the 9th. And what did they say about their capital return? So they're doing a review. They say they have net asset value of 17.75 million. And they are considering things like a return of capital to shareholders, including by way of a buyback, a potential tender offer, and they are considering the benefits of maintaining their admission to AIM. So that is the risk, which I think I sort of grew tired of, was owning shares in tiny sub £10 million market cap companies. And that's fine if they grow. If they grow and they become 20, 30, 50 million pound market cap companies, great. But if they don't grow, then it's not really economic to be listed on AIM. I mean, maybe you could go on to Aquis or some other exchange that was cheaper. But I think the listing costs on AIM are a couple of £100,000 a year, and if you've got a market cap of 6, then you're kind of giving away a couple of percent of your market cap every year in sort of dead costs, or just costs that don't really do anything for the company. Roger is in the comments and asks, have the AIM listing fees changed substantially over time? A great question. Like, I used to think that they were about £300,000, but that was 10 years ago. And I think some companies have suggested that they could maybe get away with £150,000 to £200,000. So I don't really know what the average is, but that seems to be a ballpark figure. But yeah, thanks for the question. If anybody wants to shoot their insights into the chat, let me know. But yeah, when I studied orchard funding before, I thought it was an interesting value play, and Ross is right that this one is interesting now. Something is going to happen here. Good news would be a buyback. Bad news would probably be a delisting, and who knows what that would mean for shareholders in the long run. So this could end up, very, very nice or very unfortunate. But that's small cap investing. Simon is in the comments and says the cost of non-executive directors add to the cost. Well, thank you very much for that, Simon. And of course, some non-executive directors are more expensive than others. Now, we had, that's enough on Orchard for now, but thank you very much. And I'll keep an eye out for more updates from Orchard as we go forward. One final suggestion we had in the comments today was APQ Global Limited. So APQ market cap only £5 million. So it's a sign of a slow news day that we are that we're fiddling around with these nano caps. You know, on the big news days, we get all these £100 million companies, £500 million companies to look at. Slow news day, we're stuck with the £5 million guys. But APQ Global, just having a quick look at its historic financials, a Guernsey-based global emerging markets income company. So it's seeking to deliver attractive returns through a combination of building growing businesses in emerging markets, as well as earning revenue from income-generating activities. Now, again, this one does not have breaking news. The news is from earlier this month, but they announced an unaudited book value per ordinary share of 30.2 US cents, equivalent to nearly 24 pence. And that's driven by an investment in a US-based business called Delphos International. Okay, so look, I have to be honest, I've not studied this business before, but NAV 24p, share price 6p. Clearly, someone is wrong. Lemon Physical in the comments says that ONDO looks interesting, but I'm surprised to see a company like Halma, who have a 30-year plus heritage of leak detection solutions, haven't adapted some of their technology to meet the demand. Thank you very much for that comment. And yeah, so in terms of APQ, clearly somebody is wrong, either the market or the auditors. Thank you to El Saint for the suggestion. Everybody can feel free to research that one in more detail if you're interested. Okay, so we managed to cover quite a lot today. A slow news day, but plenty of bits and pieces to check out. Thanks very much, as always, for the company. Thank you for the very insightful and interesting comments and suggestions. If you enjoyed the show, please hit the thumbs up, as it helps me out and helps out the channel. And I'll be back tomorrow with the latest edition of Taking Stock here at Vox Markets. All right, everybody, have a great afternoon. Until next time, bye for now. Cheers.